Good morning, America and Australia. Good evening, Europe and Africa. Good night, Asia. We are really glad to welcome you all at the Unicorn Cup World Finals. This is the second batch of our Startup Speeching Live, and we are welcoming all of you on board. Let's start our final battle. Can I have video, please? Hello, everyone. We are broadcasting to the whole world, and I am really glad to see all of you today. My name is Anna Fedorova, and I'm CEO of this wonderful startup pitch contest, the world's largest startup pitch contest, Unicorn.Events. You are here for the Unicorn Cup, which is the world finals of our pitch contest spring season. This is happening due to our sponsors being so good to us. Platinum sponsor, Silicon Valley Syndicate Club, golden sponsor, Network VC California Seed Fund, and VC House, our silver sponsor. Please meet our contestants from all parts of the world. They had pitched really great, impressed our investors, and here they are. You will see best of the best pitching live in just a short while. We had been organizing our events since 2009 and had done more than 250 of them all over the world. It's an open competition where successful startups pitch to private investors and venture funds. And look how well they are doing. More than 75% of our startups that pitch at our battles find directly the investors at our events. So be sure to stay with us for the next season. And in case you miss any exciting startup pitching or want to get insights from the VCs, how to fundraise or how to reach out to them, or want to just learn something from successful startups and VC founders, you can check out our YouTube channel. Please be sure to put likes, subscribe, and we will be more than happy to see you among our attendees. Unicorn Events is starting next season in a short while. From June 15 to July 15, we will be on air constantly, 2 events each week, scanning the whole world for the best innovations that are hiding from us for the spring season. And if you haven't seen us in your community, and you are a leader of the startup or VC community within your city, your country, your region, please reach out to us and we do business with you. We'll have unicorn pitches where local startups pitch to local and international investors. This is a really good thing to do. And I'm welcoming you. Just drop me a line or through our event managers, we will talk about it. And right now, we are starting our great spring finals. Unicorn Cup, and I see Julia is already. Julia, hello. I'm giving you a floor. Please meet our wonderful host, Julia. She's doing great job in throughout America, North America and Latin America. And let us see how we'll start our speech today. Hi, Julia. How are you doing?
Hi, Anna. Thank you. Thank you a lot. And I'm so happy to see everybody here. Thank you for joining us. It's really great final. And I was waiting for this day all this season, spring season. So I'm happy to welcome everybody here. And today we have wonderful startups, our winners from our previous unicorn battles. But before we start, I'd like to give many thanks to our partners. Thank you so much for your support as usual. You are doing a great job. We are very pleased to work with you, and please join us in the future. And now I'd like to give many thanks to the people who are doing the events together with us, to our expert board. Thank you so much for your time that you're dedicating for our events. And traditionally, I'd like to give the floor to our CEO, Alexander Soroka. Please, Alexander, share a few words with our guests today.
Hello, everybody. I'm glad to see here today North and South America judges, because I have already seen in the morning Asian judges and European judges. So about our funds, we usually invest up to 500K, and we are industry and geographically agnostic, and we prefer to invest on late, seed, or round A stage. Thank you very much.
Thank you, Alexander. So we are moving on to the next experts. Please feel free to share a few words about your funds, your area of investments, and also where are you based, actually. So I will start. I can see the Marisa. Are you with us? Marisa? Okay, maybe Sergey.
Okay. Thank you. Hi, Yulia. Hi, everyone. My name is Sergey. I'm a managing partner of Morphosis Capital Partners. We're a venture capital boutique fund based in Singapore. We have offices in Hong Kong and in Bangkok. I also work with a couple of family offices with up to $1 billion in assets. So we can invest up to 1 mil. And we can do follow-up investments either with us or with our venture partners or with family offices I work with up to 5 mil. Thank you very much.
Thank you. And as usual, I'm happy to see you today. And the next one, maybe Jordan. Jordan? Or Jim Thomas.
If you want, Julia, I can go too if you want.
Oh, Gary. Hi.
You want me to go? You're Gary. After you, sir. Always.
Hey, no, go ahead, buddy.
Yeah, you lost your
I
turn,
cannot get, no, absolutely not. Please.
Yeah, no, it's great to see you. Great to see you join in the entire team. My name's Gary Fowler, and I'm a serial entrepreneur and investor. I've done 17 companies, 2 unicorns, original management team at Click Software that was sold to Salesforce for $1.35 billion 30 months ago now. Seems like yesterday, actually. And Eva.ai, an AI HR tech company. We love quantum and AI. We curate those companies from all parts of the world and help them go global. we're particularly interested. We work a lot in Africa today. We're working in Nigeria, Kenya, Ghana, South Africa. So we believe intellectual capacity is evenly spread around the world and opportunities are, and our job is to use Silicon Valley as a port to the rest of the world, helping them with investment, helping them curating the company with operations, expertise, marketing, sales, business development to truly create a unicorn. So thank you, and great to see my friends here today.
Thank you, Gary. And I see Marisa. Are you with us? Okay, Marisa maybe is trying to connect. Jordan?
Marisa is probably not muted.
No, she's unmuted. No, we don't hear you. You're not audible.
Marisa.
Please, please, no, we don't hear you. Sorry. Yeah. Okay. Yes, please come back.
Yeah, we are here waiting for you. So, okay, Judge.
Jordan
is ready.
Is unmuted and has a new haircut.
Good afternoon, good morning, good evening to all of you. Thank you for having us. There's two joyous occasions today. One is the final for the spring. Once again, it's been an honor and a privilege. And for those who observe Ramadan and Eid Mubarak, Alf Kusani wa Salmin, and hopefully this is a good Eid for all of you worldwide. Also, prayers go to the people of India and all the suffering they're going through, as well as the people of Israel and Palestine. May they find peace and tranquility and stop this fighting that they're going through. I'm Jordan Wabe with Silicon Valley Venture Group in Silicon Valley. We invest in early stage companies. We write checks between $30,000 and $300,000 for all sectors as long as they improve the human condition. We prefer equity and or convertible notes. The focus is usually on the founders, the quality of the company, the market, the segment, and what have you. If you're pitching today, congratulations. Really good job getting here. It's not a simple task. Try to keep it crisp. Try to keep it clean. Get to the questions very quickly. Don't dwell on long answers. And impress upon us, why would you become a unicorn? Or what are the chances of you becoming a unicorn? Last but not least, go Americans, bring it home again. Do it, do it, do it.
Great, thank you so much, Jordan. You're, as usual, very powerful words. And now I'd like to invite Henry.
Sure. Hi, Julia. Wow, that was really hard to top, with Jordan always come after me. But anyway, I'll keep it very simple. Henry on here, I have an advisory firm that serves as fractional CFO and COO with startup and SMB, and also a venture partner for multiple funds looking for early stage companies. Early stage for me, sweet spot, it's late seed and Series A and B. That's the area, looking at a lot of fintech, crypto assets, blockchain, enterprise, and SaaS-based and data-driven companies. Great to be here. Congratulations to all of you here, startups. You made it here for reasons, and I look forward to pitch, and congrats again. Thank you so much for having me.
Good, thank you for joining us today. And we are moving to...
Yes, I see Marisa join us again. Let's try your audio. Marisa?
Okay, is it working?
Yes, we hear you.
Yay! Okay, I'm very happy to be here, as always. I'm with, I do direct investments, and then I'm a LP with Bloomberg, and Bloomberg does checks under $10 million, and they're geographically agnostic. And then also I'm with Golden Seeds, and they invest in female-founded startups only, and their check size is $250 to $2 million. So what I've been doing recently are just follow-on rounds because, as you know, startups continuously need more money. So I've been, and in right now my areas of interest are crypto platforms, AI, and quantum computing. Thank you.
Great, thank you.
Welcome on board, and let's hear what Jim Thomas has to say. Hi, Jim. Welcome.
Hey, great to be with you again. Jim Thomas here with Kirinaga Partners. We're a venture firm based in Florida. We're particularly interested in seed stage. We fund anywhere from usually around 500,000 on up to 5 million. We like to build off of the verticals here in Florida, but we're not exclusive geographically. We're looking at anything from space to photonics to gaming to health and wellness. So we're pretty agnostic to the vertical. And then we love to look at companies all around the world. And then when you're looking for an entry place into the US market, we think the Florida market is a perfect place to come and root, but then to grow from. And the same thing, we're recruiting companies from throughout the US to be based in Florida and then sell out to the world. So we just think it's a great, I'm originally from California, but we're just finding that Florida is a great crossroads to the world, and just love the program that you guys do here, and glad to be with you guys.
Glad to have you on board. That is
Hey,
wonderful.
Jim, come back to California. It's still a great place.
I'm going to be back in 2 weeks. I love me some California, just like being based in Florida.
Okay, and who would like to move on? Aldo, how is South America doing?
Yes, how are you? How are you, Anna, Julia?
Glad to see you.
I'm glad to be here. The grand final, it's exciting, and I see a lot of familiar faces already present. I am based in Lima, Peru. That's my background from Machu Picchu. And I am being judged here for many battles, and I am glad you considering me. It's an honor for me to be here. We are running a local Peruvian venture capital for early stage companies, but mainly we support also another startups to enter to the Peruvian market, advising and also finding people who wants to invest in them. So our mainly interest is also in technology, blockchain, but also agnostic, and others are welcome, because we see in all the battles that there are many great ideas that have to be considered, and no one knows what can happen with them. Thank you.
Thank you, Aldo, for sharing that with us. And Sudhir, you also with us? Yeah, hello.
Yeah, hi Natalie, hi Julia. Julia, you're looking very beautiful today. So this is Sudhir Kadam from FIDA Venture Partners. We focus on B2B tech startups like AI, NLP, AR, VR, computer vision, IoT, robotics, and so on. We welcome companies with early adoption, nearing a product market fit, and who can claim to get repeatable traction in the future. Okay, so I'm looking forward to this. I was very impressed with the last pitching session. So, and this is the final. So, I'm really very excited, and all the best to all the founders. This is a great platform for you to pitch, the kind of exposure that you will get. I think it is unparalleled anywhere. Thank you.
Thank you so much, Sudhir. And we're going to the next. I see Sasha Berner. Can you share? Okay, so maybe later, or are you with us? Nice. Yeah, so please, a few words about your fund, area of investments, shortly.
Oh, yeah, sure. Hi, everyone. Sorry about that. Sometimes you put the mute and stop and you're rushing to undo it, so I apologize. But yeah, no, I'm excited. I've been involved in the past, great companies. We generally just like to find what we call best ideas. We look for what we think is hopefully the best dedicated entrepreneurs that we can have ideas that are potentially able to scale. So we're pretty opportunistic. We don't really box in ourselves. We just really want to find those who have hopefully identified ideas and are dedicated to what they're doing. So we're pretty general. So thank you for having me.
Great, thank you so much, and enjoy today our startups. And I'd like to invite Jules Walker.
Good morning from Silicon Valley. Anna, I'm pretty sure Sudhir meant to say you look beautiful today too.
Oh, thank you. I was waiting for somebody to say that.
It seemed appropriate. It did. So again, welcome from Silicon Valley. I feel like many faces on the screen here are friends now after judging several times with all of you. I've enjoyed the experience. First of all, to the companies that are presenting today, congratulations to you. The fact that you made it this far means you guys are winners, and we expect big things from you. I head up business development for KPMG US in our emerging technology practice, which means that I work with companies that are two guys in a garage up through actual unicorns and pre and post IPO, talking to them about all the various services that KPMG can provide to them. That's my day job. On the side, I do some angel investing, pretty wide swath of investments, but I like to focus on stuff on the edge. Space tech, food tech are some of the things I'm looking at recently, some applications for drones as that gets more mature. And not quite into the crypto yet, but I am looking at some fintech stuff as well. So I always enjoy these events. Thank you very much for continuing to invite me, and look forward to seeing the presentations today.
Wonderful. Thank you. Thank you for these words. And I see Subrata Patra. Can you tell us if you
Hi,
want?
Julia.
Hello.
Good morning, good day, good evening. This is Sujata. I'm currently logged in from New Delhi, based in Bangalore, India. I am the managing partner at Idea Capital Ventures, as well as venture partner with our ventures. We typically invest up to $10 million. We are looking out to invest around the world. Very happy to be here today. Thank you.
Thank you. And I can see Ella are joining us today. Thank you.
Hello,
Please
Ella.
tell us a few words. Hello.
Sure. I also see a lot of familiar faces today. So yeah, my name is Ella Lee, and I'm the CEO of GGC Capital, the partner of GGC US Fund. Our partner, we are the subsidiary of GGC Group, the largest fund in China. We also have 148 funds in China with a total valuation of $21 billion. GGC Capital is a US subsidiary of GGC Group, and we have two innovation centers in US, one in Silicon Valley and the other is in Boston. And we also have a complete fund system from C round to B round. And starting from this year, we're shifting to healthcare innovation space. And also thank you so much for Anna for your great help. Actually, we're launching our first healthcare accelerator program in June this year, and Anna has been helping a lot for the promotion, and we're still taking all the applications from healthcare startups, and the application will close around late May. Myself is a scientist turned venture capitalist, and I have a 15 years experience in pharmaceutical and also biotech experience. And I have a special interest in therapeutic investment opportunities from drug discovery to commercialization stage. And also have special interest in AI, medical device, and also digital medicine. It's really a pleasure to be here. Thank you.
Thank you a lot. And we are pressed by time, so I'd like to invite the last judge, Keith Herman.
Hello, everyone. Yeah,
hello.
Hi, everyone. It's nice to be here. We're getting up there now. So, good luck to everybody presenting today. I'm with IPA Equities, and we invest in innovative and disruptive companies worldwide. Checks are between 2 million to 10 million. And basically, we look for Series A or later companies that we feel that we can bring value and help them scale globally. Good luck to everybody, and hopefully it's going to be a nail biter.
Thank you. Thank you. And again, I would like to give many thanks to all of you for dedicating your time. Your involvement is really enormous for us and for all startups throughout the world. And now, please have a look at this slide. You can see all our participants of today's battle. And we will know who is the winner of this season. So please, before we start, I recall to our startups that we do not recommend to mention the fundraising issues. If you'd like to share a bit, you can do it in the private chat. So, and we can start the pitch session. The first participant is the winner of the last unicorn battle in Silicon Valley, is Albert Santala and startup 8base.
Hello, everyone. Can you see my screen?
Hello, Albert. Yeah, you remember that we have 3 minutes to pitch and 3 minutes for QA, or 5 maybe minutes for QA session. So if you are ready, we will start. And please,
yes.
You're welcome.
So hello, everyone. I'm Albert Santalo, founder and CEO of 8base, a low-code development platform for digital products. I got my start as a software engineer, later a management consultant, helping large multinationals with digital transformation. And then I became an entrepreneur. I founded and exited 2 venture-backed enterprise software companies prior to 8base. So 8base was born from my direct experience as an entrepreneur and as an engineer. I always believed that a platform could be built that it would accelerate the development of production-grade software, especially to the benefit of founders, especially non-technical founders. We're in essence democratizing creation. We compete in the low-code development platform space, which is growing from about $10 billion today to about $52 billion by 2024. So the space is in hyper growth. You know, founding companies has gotten a lot easier, yet building digital products is still hard. Most of the time, founders focus on the part of the iceberg that is above the water, but a lot of the problems often exist below the waterline in the underlying systems that power the application. 65% of founders these days are non-technical, and this number is growing. And so 8base approaches this in a unique way. We give web and mobile developers superpowers. Our product today allows creators to build powerful and scalable web and mobile applications with a compact team of only front-end or mobile developers. As small as a team of 1. A team of 1 can accomplish very big things. So you would ask what type of products? So things like multi-tenant SaaS, marketplaces, portals, etc. We can build internally facing applications, but most low code can't build externally very well. We believe that is where the big opportunity is, and that's where 8base is strong. We enable a strong and nimble foundation for hosting digital products. We're built on top of AWS. The platform is extensible, headless, serverless, backend with a relational database behind the scenes. All of this computing application infrastructure and integrations are made instantly available through our powerful GraphQL API. Our GraphQL engine is a very, very big part of our innovation and the most powerful one in the world at the present time. And if you think of modern software as a back end, a front end, and an API, 8base today is very strong on the back end and the API, but we're very actively working on our App Builder product, which will launch later this year, which will allow for full drag and drop, very powerful user interface development capabilities. So we're very excited about this because this completes our vision for a full low-code development platform. To date, we've been working actively with 2 branches of customers, developers around the world that use our product on their own. This includes everything from solo developers through IBM Global Services, which has been a customer for 2 years for work they've been doing in NATO and Europe. And then we also have customers that ask us to help from a professional services perspective, where we help with design and development on our platform. And the revenue that's generated from that helps to fund the operation without as much of a dependency on external capital. So, you know, we have a significant amount of traction. We've raised about $4.5 million of capital, about 4.6 million in sold business with a $2.5 million pipeline. This pipeline is increasing, and about 5,000 or so developers that have used the product around the world.
I'm sorry, Albert, your time is up. So yeah, here we can stop.
Hi, Albert. I'm here. I got a quick question. I've been seeing more and more of low-code to no-code companies similar to yours. I think a couple of quick questions there. Can you share with us in terms of what would be a differentiating factor with, I think, your company and some of the other low-code? That's the first question. Second question is, if you talk to a lot of developers and others, they still believe there's value in coding. If you agree with that statement, what would that be? Thank you.
Yeah, so no, thank you. Those are great questions. The words low code and no code are thrown around to describe a lot of things these days. You know, for obvious reasons. It's like just about anything that you can do without code is low code or no code. There are very few bottoms up platforms that handle back end, front end, API, the whole thing that you would build your software on. I'm just going to give you one quick example. Like Airtable is a very successful product. It's a low code product. It's essentially a spreadsheet on steroids. You would use it inside of your company, maybe to enable some type of finance process or HR process. You would not use it to build your product for your startup. And if you really take heed of the products that are out there, you would immediately start to whittle down many of them as not being able to help you build your startup. They would be the things that you would build to operationally help your startup, but not build your product. So in a nutshell, that is the biggest differentiator with 8base. And it's not designed for MVPs. You can build MVPs, but it's not designed that it be one of these simplistic products that you throw away after the MVP is done. The idea is you build on 8base to scale. So that's really where we differentiate. And we don't believe there's a product like us really in the world. So we're very excited to get the full product out there. Your second question, what was your second question again?
Yeah, so the second question is, I think if you talk to developers and others, there's still value for coding. I guess the short answer or question is, do you agree with that statement? Yes or no? If you don't agree, why you don't agree with that statement?
You know, look, I believe software development is the same as any other process in business. If you can eliminate steps and still get the quality that you need, why wouldn't you do it? So if you look at the founder's view of this or the business person's view of this, if they can deploy less capital and less time to get the same or a better result, why would they want to build bottoms up? So the idea with 8base is that we are not taking anything away from developers. Many low-code products, when a developer is in there using it, they feel like, okay, they're very limited because the product is very opinionated. We are trying to strike a balance with removing steps from development, but at the same time, being an environment with a great developer experience that a developer loves to use because they don't have to do a lot of the mundane work that they would otherwise need to do.
Thank you for your answer. Maybe one more quick question.
Yeah, I have a question to Albert. Albert, keep it brief, okay? Because you know you want to have more questions. So how long will it take for you to go 10x from where you are? What resources will it take? Okay, and how do you plan to fund those? You know, what will be your funding trajectory for that?
Yeah, so we anticipate doing a larger funding round once Outbuilder is out the door. And the 10x trajectory for us is somewhere between 18 months and 24 months.
Okay, thank you.
You're expecting a 10x trajectory in valuation?
In revenue.
Revenue growth.
What is the key valuation metric you're driving other than revenue?
Well, growth to me would be the largest one. Gross margin, lifetime value of the customer, very important. The product is super sticky, and the retention rate is, you know, we basically have a negative retention rate. So customers are upselling all the time. So we lose very few, but we upsell a lot.
Thank you, sir.
Okay, thank you for the questions and for your answers. And I can see that many judges have troubles with their voting links. So please write to my support person, Lydia. She will send you the link again, or maybe to the new one. So, and the next participant is the winner of our Unicorn Battle in Eastern Europe. And it's a startup from Latvia, SIA Aerones. Please welcome. Hi, Denise.
Sorry, I just unmuted myself. Yeah. So yeah, I can start. Yes.
Yeah, please make the full screen, and
yes.
You can start.
Okay. So yeah, my name is Dainis. I'm co-founder of company Aerones. We build robots for wind turbine blade maintenance. We are YC company. We have more than 5 million euros in European grants to build this. And we will launch our Series A round in investment round in June. So wind industry is rapidly growing over the years by adding more and more turbines. Turbines also becoming bigger. Every 10% in length of the blade gives them 20% in efficiency. So with the growth of the blade, the efficiency grows exponentially. But the bigger the turbines, the bigger the problems with the blades. So wind industry is sometimes losing even up to 20% of its potential because of the icing, debris on the blades, problems caused by the lightning, leading edge erosion, cracks, etc. Wind turbine blade maintenance is a $7 billion market, and it's rapidly growing. Right now, all of the maintenance is done by people in ropes, hanging in ropes or in the baskets. It's purely manual job. It's not safe. It's very slow. And it's very seasonal. It can be done only in particular weather conditions. They have a lot of downtime and idle stay. So this is what we do. We put 4 winches on the ground and robotic arm platform in the middle. So the first winch is pulling it up and down. Rest of the 3 winches are adjusting where the robot is in horizontal space. It's a perfect platform to access any point in the blade in a very fast and efficient way. It's kind of a 3D printer upside down in the air. So in the middle, it's a robotic arm platform where just in a few minutes we can change different kind of arms. We have arms for lightning protection system test, visual inspection, internal inspection. We are building arms for active thermal inspections, ultrasound inspections, and we can do more. We can do different kind of repair tasks, painting, grinding, sanding, cleaning, etc. So there are different kind of robotic arms for different kind of tasks. So we enable the wind industry maintenance, blade maintenance, to switch to automated, lot safer, lot more efficient, lot faster robotic solution. Same technician is sitting in the car in safe environment, doing the job 3 to 5 times faster, and there is more. Our robotic system is more suitable to do the job in much higher wind speeds, a lot lower or higher wind weather temperatures. So we actually practically don't have idle stay. We have 10 times less idle stay days in our projects comparing to rope technicians. We are constantly improving. July, August, we will do the demonstration of our offshore solution. We started our operations in March 2020. And in 1 year of operation, we've done more than 40 paid projects for world's largest wind turbine players like GE, Siemens Gamesa, Vestas, Enel, EDF, and etc. 2021 is our scaling year. We're building more robots to be shipped to our customers in Mexico, Canada, Chile, and other countries. We are already having robots in North America, South America, and Europe. So in June, we are launching our Series A. Thank you.
Thank you, Denise. And please, questions, if you have, feel free.
Denise, I've been looking at the robotic space. So you look at something like Zipline. It takes a lot of CapEx or SG&A to like actually grow into the different regions to scale this. Like, what is the marketing plan, you think? Like, how have you thought about that?
Yeah, so we are a service company. We are doing the services. We're not selling the robots. And yes, it's a money-intensive business, but it also has a good share of revenue and good profitability. So we will scale. We will scale on investment. We will launch our investment rounds, and basically, we will scale using the investments.
Hi, Dennis. This is Jules. 2 questions. You touched on it, but I'd like you to go into a little bit more on the offshore opportunity. I think the U.S. just announced a big plan to offshore a bunch of stuff off of Massachusetts. Great opportunity for a company like yours. But the model you showed us with the winches, I can't picture how it's going to work on the water.
It's going to be a little bit different. Sorry, I interrupted. It's going to be a little bit different. We can't show it right now. We are going through the patent process. There is only one company which has seen that. It's GE, and they announced this as the best idea for the future offshore robotic maintenance of the blades. They're waiting when we will build it. They're first in the line to trial it out. It will be. It looks amazing. It will be amazing technology to do the job for offshore turbines.
And my second question is about the business model. You didn't really talk about it. Are you selling the robots? Is it kind of a SaaS type of play? How's it work?
No, we are doing this. We are a service company. Basically, we are building our own robots, and we are doing our own services. So the actual money is recurring services, not in sales of the hardware. That's our opinion.
Dennis, this is Jordan. What's the value proposition to the customer using your service? And what's the stickiness of your service? What would they make them come back again and again and again?
So the turbines are becoming larger. They become more efficient. So the largest turbines in the world already produces like 1,000 euros per hour. So the downtime of the turbines sometimes costs even more than the technician the technicians which are working there. So since we can do the job 3 to 5 times faster, it's not an issue about even about the price of the service, but that how much of the downtime we are saving for the customer.
So what's the relationship between the current methodology and your methodology in terms of cost or percentage? Give me the metric.
Currently we are doing approximately the same. The price for the services is approximately the same, but we just do the job 3 to 5 times faster. We don't try to be cheaper, and we want to be in that sweet spot of the price which they have paid previously, and but we could just do the job much quicker.
Yeah, and the stickiness of the returning of the customer.
Safety, it's basically you need to do the lightning protection system test. You need to do once in 2 or 3 years. You need to repair your leading edge once in 3 to 5 years. So you need to do the visual inspections. It's the best case scenario once a year or once in 2 years. So basically you have to do those things. And then you have like quite risky solution when the people are hanging in the ropes, where you have the robotic solution, which you will have a lot less struggle, a lot safer, and actually a lot cheaper because we are doing it much faster. And that's the stickiness.
Got it. So as a service company, what's the predictability of your revenue quarter over quarter, year over year?
So yeah, there are almost 500,000 turbines all around the world. So there is plenty of job for thousands of robots. And we already have like big agreements, for example, with GE. There will be a big agreement with NL and other big players in the industry, which have thousands of turbines all around the world. So they are already doing the, like, for example, we need to do, for example, 2,000 LPS tests, 500 in first year, 500 the next year. And so like the agreements are sometimes even for the longer periods.
Okay, good. Thank you for your answer, and I'm sorry for jumping in, but we need to go on. So please keep asking questions in the private chat. And so we are moving forward to the next startup. And the next startup is from Chile, and it won the Latin American battle. Please welcome Wareclouds and Arturo Quiros. Hi, Arturo.
Hi, everybody.
Nice to meet you.
How are you?
Are you ready?
Yes, can you see the presentation?
Yeah, okay, you can start.
Well, hi, my name is Arturo. I'm from Chile. I'm a Wareclouds CEO and co-founder. And in simple words, we store e-commerce products and pick and pack their orders in people's homes. And this way, we believe we are effectively enabling dark stores wherever the e-commerce need and at a much lower cost. I guess you all have bought something online and thought that the shipping cost was too expensive, or it was too slow, or it was just inconvenient. And accounting for 53% of shipping cost, the last mile continues to be the critical piece where efficiency and consistency are lacking. And this is because warehouses tend to be far away from the consumers, and also because delivery companies are traditionally leveraged to strong physical assets and seek their efficiency above the end consumer experience many times. So at Wareclouds, we transformed the traditional logistics model into a model based on sharing economy, where we leverage people's assets such as their space, time, or car. And this allows us to bring the products of the brands much closer to their consumers, but at a very low cost. So basically how this works, we enable the e-commerce warehouses close to their demand by using idle space. We call these spaces the Wareclouds and our people houses. And we connect those houses with people who have a car and are willing to pick up those orders and deliver them to the final consumer. And in this way, we are enabling any e-commerce to offer same-day delivery and even 2 hours delivery at a very low price. For this to work, we have a platform which allows e-commerce Wareclouds and Clouders to interact and help us track the order from the moment a sale is created in the e-commerce channel until it's delivered to the final consumer. Obviously, this is a very large market, which has been on the rise for many years and has even been further enhanced with the COVID. And the truth is that we are quite confident in being able to say that the model at least makes sense. We had a very high demand for the service here in Chile. We started 1 year ago and we have grown relatively fast. Today, we have more than 100 clients and recurring annual revenues of more than $1 million. And if we add that to that we have a healthy unit economics, it positions us quite well to be able to have a profitable company as we scale. Our revenues came from charging e-commerce for storing their products, for picking and packing their orders, and for each deliver, and we shared that revenues with Wareclouds and Clouders. This is complemented by the fact that both e-commerce, Wareclouds, and Clouders are very happy with how the model works. We have high satisfaction levels, which let us think that we're succeeding on creating a network that adds value to every user. And we have defined clear and ambitious goals for the next months, where we are not looking to be a last mile company only, rather a partner that all e-commerce companies want to have. And finally, the company is structured in 3 areas, which are growth, operations, and technology. We are already 8 people, all with programming skills, data analysis, and e-commerce, and above all, a lot of commitment to the project. So thank you, and we invite you to join us if you're interested in seeing how we change retail logistics.
Thank you, Arthur. Good job. You're in time. And please, questions.
Arthur, a very simple question from me, extremely simple. When I look, if I'm understanding your business correctly, I look at the last mile of delivering the goods from a logistics standpoint. It's very challenging. How do you do that?
Yes, I mean, today what we are doing is we are warehousing the products in very strategic places in the city center. Today we have people that has car and goes to pick up those to those houses an order and delivers to the final consumer. What we are enabling are different routes for anyone to accept that route, pick up the orders in different houses, and deliver to the final consumers.
I have a question for you. What is your sweet spot in terms of the kind of product categories that you handle? Because obviously you cannot handle oversized items, right? You want to handle smaller items. So what is your sweet spot?
Yes, today we are accepting products that have less that their size is less than 80 centimeters. But the sweet spot, we will say that any brand that have these small items and less than 200 SKUs. I mean, if there's a brand that has more than 200 SKUs, it's quite difficult for us now, at least, to manage those in people's houses.
So for me as an e-commerce seller, my inventory is going to be fragmented in various houses. Okay, how do you manage my optimization there in terms of inventory? Are you going to be finding a location for me that is closer to from where my consumers order? How are you going to manage all that? Because that's what Amazon does, right, on a large scale.
Yes, to be honest, at the time we're now, we let the e-commerce to take that decision. But as we start understanding that the sales of every e-commerce, we recommend them where to store their products.
And one final question, how do you do returns handling?
Sorry, what?
Returns handling. Returns, goods that are returned by the customer. Customer says, I don't want this, right? And it tries to return that good. How do you handle that?
We have a reverse logistics service as well. So we take the product from the consumer and we take it back to the warehouse.
Arturo, I'm having some struggles getting my arms around the business model. I feel like you still have that last mile problem getting the products to the city center location. And the reality is people live in the city do not have a lot of space. People in the city that have a lot of space are generally well off, and they're not interested in providing their dining room as a warehouse. So I see problems on both ends of the spectrum there. Can you elaborate a little bit?
Yeah, sure. I mean, what we do now is we're storing products in this house in the city center, and I will say you'll be surprised. We have a couple of Wareclouds that they even transform their dining room and living room into a warehouse because they are earning good money with us by storing the products, but they're picking and packing their orders. So there's not a last mile to get to the city center, to these houses. The e-commerce just send us the stock once a month or twice a month, and we fulfill that orders in that houses that are in the city centers.
This is Ella. So who is the largest competitor from Chile, and how do you compare your company to them?
Here in Chile, we will say we have two types of competitor or substitutes. One is the traditional logistics companies that today are doing fulfillment services, but they tend to be far away from the consumer, so the last mile is more expensive. And the other, we have other more traditional dark stores companies that have warehouses in the city center, and they are doing micro fulfillment, but they are more expensive in fulfilling the orders because they have to invest in these warehouses, and the operational costs are higher than we are.
I have a question. Have you run into any issues with regards to zoning? In other words, people conducting business out of their homes?
We haven't. I mean, we did in Chile. We have one trouble, but we try to solve that legally. And what that means, we have to have a municipality permission that costs $45 a year. So for at least here in Chile, and as we have investigated in Colombia, in Mexico, that are the next markets, is something that we could move forward with not any legal problems.
Okay, good. Thank you for your questions and answers. And we should stop the QA session. Thank you, Arturo. It was Startup Wareclouds. And please welcome our next winner of the Middle East and Africa Unicorn Battle. Welcome Ottopia Technologies startup from Israel, and G's Shallow. Please.
Nice to meet you, everyone. Good morning, good afternoon, good evening. My name is Jesse, and I'm from Ottopia. We bring universal teleoperation. But first, we need to talk about the future of mobility. The future is autonomous. People cannot and should not be driving. It is dangerous, it is problematic, it is expensive, it is wasteful. But every year, the giants say, another year, another 5 years, another 10 years until autonomy is ready. And it keeps going. And the reason why is simple. Edge cases, situations where the autonomy does not know how to behave, prevent these vehicles from handling every situation. The current solution is not a solution, it's to have a safety driver sitting in the vehicle and solving those problems. But what's the point of a safety driver in a self-driving car? So we're looking to enable every type of autonomous deployment with teleoperation, which is the ability for a human to remotely monitor and control these vehicles. It's our mission, enable autonomy in every vehicle via teleoperation. And when I say every vehicle, I mean every, with its public roads vehicles, taxis, shuttles, trucks, private facility forklifts, tractors or yard trucks, or off-road, mining, construction, landscaping. Each of these vehicle types is relevant to us because unlike autonomy, teleoperation is relevant to all of them equally. The differentiating factor is the driver, but that's just about who uses it, not the technology itself. This is made possible by a combination of hardware on the vehicle end and the control center end. And what happens is a relay, a near real-time relay of video from the vehicle to the teleoperator over 4G public LTE networks. We do not wait for 5G. It will take too long, and there will still be pockets of 4G when that comes around. So we work with what we have, and that operator can monitor the situation, give assistance, indirect control, and even manually drive the vehicle as necessary. We've retrofitted a vehicle already, driven it in Tel Aviv from as far as San Francisco. Again, public 4G LTE networks. And you can see that in the top left corner, what a teleoperation station will look like with multiple screens. And in the bottom right corner, the ability to choose a path, an indirect control, something that allows the autonomy to do what it does best while enabling the teleoperator to give their human intervention in the way that they know best as well. Because teleoperation is made up of multiple factors, the most important is a dynamic video compression and network optimization. Without those, you do not have teleops. But safety systems, what we call ATAS, like ADAS, but advanced teleoperator assistance system, and cybersecurity, as we see it, are equally important. But don't take our word for it. We've been tested by BMW, a Horizon 2020 project, Easy Mile, and Deutsche Telekom, and NVIDIA, and they all see that we are the best. And that's because of a stellar team and a group of advisors from brands you've heard of before. Thank you.
Wonderful, thank you. And please, questions. It's time to ask.
Great idea, love it, especially since you are from my neck of the world, from Israel. And I'm kind of rooting.
Yeah, well, actually, yes, I'm curious about how do you solve the delay that you have, even for if you are using a telco that may have some parts of the network that you don't have the same speed. So you may have a delay in the signal, and that may happen something wrong with the driver or something, no? But you tested, so you already solved it, no?
We have. There are two things to consider. First of all, we are able to minimize the latency, the delay, the lag, because we're constantly monitoring the network capabilities and adjusting the video, the transmission accordingly. Therefore, there's no lag. You might have less resolution, but you'll always have a consistent and resilient picture. However, in the situation where there's no connectivity, there are safety systems involved that mean that the vehicle will stop on its own because it is no longer being given commands by the teleoperator. Furthermore, the safety systems also take into consideration collision avoidance. So if the vehicle is driving as it is, as an autonomous vehicle, it knows X distance times Y divided by Y time is the minimum collision distance. So it already knows to stop there. We just factor in the extra latency that the teleoperator will experience in order to stop even a little bit earlier. Ultimately, the collision avoidance is made by the decision is made by the vehicle, not the human, because we make mistakes.
Mm-hmm. Thank you. And Jordan was trying to ask something.
No, thank you. Thank you. Jesse, where you are today versus where you're going to be in X number of months or years, where you are a viable product ready for an M&A offer or serious acquisition engagement. How far is that? How much money do you need to get?
We are currently after a pre-A round of $9 million, bringing us to a total of 12 million investments. We are looking to get to a Series A very soon, based off of the number of successful projects and pilots we have, plus paying customers, which result in recurring revenue on a large scale. Unfortunately, none of that information is specifically officially public, so I can't go into further detail at the moment. However, yes, a question of how much in total, it's going to take a significant amount more. It's a total of probably about $100 million to get it to a truly universal, always applicable solution. However, It's already been tested in each of these verticals, and they are already finding value from it.
How much time do you think you're going to need to get to a place where you're more viable than that?
It depends on how quickly we can hire people.
Not a good answer, but I pass. Let's move on. We're good.
It's just something worth pointing out that after this recent investment, we're looking to double ourselves in terms of personnel, but we can't press a magic button. So that's actually our biggest backlog at the moment.
Okay, I have a quick question. Yeah, I have a bit of a trouble understanding the exact problem you're trying to solve. So can you please elaborate on it a bit more? So because this technology still takes time, still takes time to develop, and I don't want to see your company like serving, like, let's say, horse-manned trains that were effective in US for
half a
some time,
day.
right? Yeah, because you're kind of a transition, you're kind of a middle point, between manned vehicles and computer controlled vehicles. So what's the problem you're trying to solve?
Two things. First of all, you're right. In the short term, it seems more obviously viable. However, when you take an elevator today, there's still a way for a human to intervene and solve problems, because elevators, 100 years after being invented, still have problems. So if a vehicle that's driving along the roads autonomously is slightly more complicated than an elevator, is also going to need human intervention. Furthermore, public opinion, public comfort is going to dictate the ability for a human to intervene. I will not put my 7.5-year-old daughter in a robotaxi knowing no one can help her if you know what hits the fan. So it's always going to be required, even if the ratio is 1 million vehicles to one teleoperator, you're always going to need the ability for a human to be there.
Okay, thank you.
Good. More questions? We have time for one quick question.
Hey, Jesse.
Where are the humans located?
Anywhere. They can be anywhere you want. You can have a call center from a low-income area if that helps lower your costs. If you want to hire in a particular area, people of any gender, race, age, disabilities, because you're working from an office, a lot of the issues that come with trucking and public vehicle driving go away.
Please, Subrata, your question.
I was just going to ask. Hi, Jesse. This is Subrata here. I just want to ask you very quickly. Could you please give a flavor of your business model?
Yes, very simply, it's a yearly subscription model based on the number of vehicles are being used. Whether if they're used for 1 mile or 1 million miles, the price is the same. It's number of vehicles that are teleoperation capable and in use, not the teleoperation stations. We're in essence a software company. If someone provides the hardware, then we just integrate. If someone needs the hardware, we have partners to provide that.
Got it. Thanks.
Okay, thank you. Thank you so much.
Thank you very much. Have a great day.
Yeah, please, the rest of the questions you can write in the private chat to the founder, so feel free. And we are moving forward to the winner of the North American battle, and it was startup from Canada, Sherwa Online Services. Please, Luis Persicini.
Hello, guys. Good morning. I got a few hours of rest from last night, so well refreshed. Let me just share my screen here.
Yeah,
One
please.
second. Okay.
Could you make the full screen?
Sure.
It's better. Okay.
Yeah. So, hi, I'm Luis from Sherwa, and we are a platform to connect gamers based out of Vancouver, Canada. Now, I want you to imagine you want to play a doubles tennis match, but on top of not knowing who you're going to face, you don't even know who your partner is going to be. This is what happens today to the 700 million people that play online games around the world. And by the way, did you know that the gaming market is already the largest market in entertainment overall? I have a quick video here. This is a live product that I want to show you. In our mobile app, gamers can find playmates with similar interests to play with, as well as more experienced players to help them improve their skills, allowing them not only to connect, but create meaningful and lasting connections online. Our unique solution allows for an instantaneous connection between gamers, no more waiting for replies on forum posts or looking through an endless list of potential gaming partners without knowing who to approach. Our tool has also found great adoption at the streaming community. Using the party feature, small streamers can promote their stream to a new audience and increase their viewership. Our beta version has been out on both iOS and Android for about 9 months right now, and which we acquired almost 500,000, about 450,000 downloads, and we hit almost 100,000 monthly active users in February. With users in over 6 countries and 2 languages, we're ready to continue to scale. Our monetization comes from in-app purchases, B2B partnerships with endemic and non-endemic brands. We have partnered with companies such as Epic Games, PUBG Mobile, and we have many others in the pipeline. We do not have a direct competitor at this point that is already consolidated in the market. Most of similar apps such as Rune or Mood or Plink are either on the same stage of development or still growing their community. We are a team of 3 main founders with strong backgrounds in business, marketing, and technology, and our multicultural team consists of 20 highly skilled developers, designers, and business analysts. We've also gathered a team of advisors, including high-profile gaming influencers, industry experts, and successful serial entrepreneurs. We will become the largest platform connecting gamers worldwide. Welcome to Sherwa. That's it, short and sweet. Thanks, guys.
Thank you. And please, questions? Anybody would like to ask, to clarify, to give comments or suggestions, please. Do not be shy.
I don't know the space so well. I know it's just very crowded. How do you differentiate yourself?
So gaming overall, you're right, can be quite crowded. There's no one platform right now that serves as sort of a hub for gamers to find each other. You do have great communication tools like Discord, but they're still relying on the underlying reason that you have to know people to add to your list. What we're offering is a solution that will give you someone on a personalization level that plays about the same level, but also same personal characteristics as you. So we've been compared, I guess, to Tinder in some instances, which I would not dismiss because Tinder is successful, but obviously dating is not the main purpose here. In a way, we're offering a personalized manner for you to find people to play with, no matter the game you play.
Mm-hmm.
And what's the business? How does it make money then? Like what's so like I know that a lot of people are using Tinder, and I don't know how that business model works. But tell me how this works.
Yeah, so Tinder obviously, we don't necessarily compare one-to-one, but it's a freemium business model. So you bring users for free with the capacity of finding others to play. And then we add a bunch of in-app economics, meaning small incentives and perks for them to find people faster or create larger groups for obscure games or things that they wouldn't necessarily easily find online. Also B2B partnerships with a way for brands to directly approach gamers with a certain profile. We have all the data behind the gamers, from location to phone models to age to everything, the games they play across the industry. And also subscription and ads could be something that we would add in the future.
So for each partner that you're going to work with, is that for instance, do you need to customize your platform or your software to each individual game? That is my first question. Second question is, you mentioned right now you are the only player in the sector now. There's really no direct competitor. But moving forward, how do you see this space? For instance, it seems it doesn't, or my understanding, it doesn't have a really high, for instance, a technical barrier. How do you protect yourself? Two questions.
Yeah. No, great questions, and I think they relate to each other. Number one is we do not currently rely on API connections with the games. We decided to go the community route, meaning let's build a product that the community likes. So we start getting people use the product, grow that community, grow the need, and create a habit in people, which is hard to do, we realize. But once you do that and you solidify that habit in their minds, then basically what you do is you scale from there. Do we want to have API connections with the games going forward? Absolutely yes, but that is not the focus right now. We're spending all our resources at this moment to build a product that the community wants. to your second question, the competition, there's no way out there at this point that does this. There are some communication tools like Discord, obviously they're pretty big, or Twitch streaming platforms, but none of them present a solution like this. Could they build something like this? Absolutely, yes. It would take them time, but they could. The main reason for us to have a competitive advantage is, number one, whoever builds the community faster, and number two is we stay agnostic, meaning API connections seem a nice thing to have, but once you start limiting yourself to that, then you lose control of your own business. So we want to stay agnostic across platforms and game profiles as well.
Actually, one more follow-on comment. So I'm quite impressed by how fast your user really increased for the population. I don't know whether you already have any plan how you're going to use all this user data, or as like a next step of your business model.
Yes, we do have a few plans. Obviously, we're talking to some companies, endemic and non-endemic brands, to potentially use the data to help them reach a better target users. Also to improve our own product. So we have constant feedback loop from an UX perspective with users to make sure we improve it and solidify the product in their heads. Going forward, we think this could be a big data play. Yeah, you're absolutely right. If we continue to gain users and capture their habits, we can gather all that data, and that can be very useful, obviously, for many purposes.
Okay, yes. Thank you. Please, your
Yeah,
question.
I know a thing or two about gaming. I work with the Sony Online Entertainment and Marvel and some other companies. So my question would be that the bit reminds me of Game Center from iOS, you know, that launched around 2012, I think, or even earlier. And, you know, attempts by Google that were like I think Google Play games, something like that. But honestly, they all failed. I mean, there was no success that they've planned to it, and these were, you know, the services that were launched by the app stores themselves. So, who are your competitors, and why do you think your service, you know, is in demand?
No, that's a good question. Like Game Center, one of the issues obviously is it's limited to iOS, right? So everyone who has an iPhone and plays on their phone can be a part of Game Center and have friends. Now that limits a lot, especially in developing countries, the amount of people that you can have as friends, right? If you're not an Android outside of the US, you're basically out of the market from a mobile perspective. Number two is we're not just mobile. Mobile is where the app operates right now. We are working on a port to PC, but we support any game, meaning let's say you want to play, we had a user yesterday who wanted to play Tibia, which is an old game you're probably familiar with that not a lot of people play to this day, and created a group and quickly found like 5 people that were registered for other games, but you know, just like to play that game as well. So by keeping agnosticity in terms of game and platform, we think that we can reach a much broader audience, and also not just the experts, but the casual gamers that are looking for someone to find online. From a competitor perspective, we have a few other apps out there that do this on a game-by-game specific. So we have these guys called Rune that do a mostly related to Clash of Clans, but it's very specific on Clash of Clans. And we want to build a community, more of a social platform than a game-specific app. That's more the answer there.
Okay, thank you, Luis. Thank you for your presentation, for your time. And we go to the next startup. I'm so happy to invite Angela. It's female startup. It won the Asian battle from Singapore. Please, Notarum. Are you here? Yeah.
You see my screen?
Yeah, wonderful. Please make the full.
Perfect. Okay, excellent. Well, hi, everyone. I'm Angela, co-founder and CEO of Notarum, and we are your partner in intelligent diligence. So companies are spending over $100 billion every single year on the compliance programs. But for most companies, it's an absolute waste of money. And that's because there's a few key problems. One is that onboarding times have exceeded over 30 days globally. So for a company onboarding a new vendor or a new customer, it's 30 days until they can see value from this customer. Also, 80% of compliance spend globally is on headcount, which is both bad for business and a huge opportunity for us. And alarmingly, over 90% of their vendors trust the information provided by their soon-to-be customers. This is basically like asking criminals if you're criminals and expecting them to be honest in their reply. The world just doesn't really work this way. But there is one key problem, and that is the fragmentation. Companies use between 8 and 12 different platforms, tools, and databases every time they complete a single check. It's slow, staff hate this process, and also manually re-entering the information time and time again means there's just the opportunity to make errors. But there is a better way, and we have already built it. Notarum is a global end-to-end workflow solution utilizing AI to automate 90% of the existing due diligence and third-party risk process. We currently connect to over 200 databases in over 150 countries to make sure we have the most rich and accurate data sources for our customers to complete their process on. We've then built an entire workflow solution. Our mandate is to add value to every single step of the process and every user involved in that process, from the lowest compliance analyst right up to senior management. Now let me break down the workflow for you. So step one, we help our customers identify who they're really doing business with, screen those names of individuals and companies against international screening tools, conduct a customizable risk assessment, complete an executive summary, and undergo all of the approvals on platform before all the results are stored in our audit trail. We then have tools for individuals to manage their day-to-day workflow and for managers to get a good insight of what's happening within their team, how many cases are open, who's holding those open tasks, and the velocity of their team. Our current customers connect with our platform either via our APIs, which link with their existing tech stack, or via our standalone web-based interface. We can currently service any company in any industry, but our go-to-market strategy focuses on just 5: fund management, technology, professional services, multinationals, and of course, banks and financial institutions. We've built strong corporate partnerships with some of the biggest names in the business. The team behind Notarum are Jamie and myself. I'm an ex-private equity lawyer, and I was responsible for completing global risk and compliance processes across 5 continents for my multinational organizations. My co-founder, Jamie, is the tech whiz, and she's a UPenn trained engineer who's also spent 8 years in early stage startups. Together, we're hitting the ground at the perfect time. Digital transformation is rapidly accelerating, and compliance costs are really becoming a focus globally. And companies, they also want to do better because they're being held accountable, not just by the regulators, but also by their shareholders. We look forward to talking to you more.
Thank you, Angela. Please, QA.
Angela, one quick one advice and one question. Okay, you call this a due diligence system. So when you're presenting to investors like us, due diligence has a different context completely. Okay, so you might want to call this vendor due diligence. That's number one. Number two, you haven't mentioned about your traction. What's the traction you're seeing? This is a very good opportunity, and we want to know, what kind of traction have you achieved so far?
Sure. So we're still early stage. We only got into market last year. We do have 5 figures revenue though. So we do have some early kind of commercial traction there, but we are really sort of early stage still. We do work on a recurring revenue model though. So we are a SaaS-based company.
Okay.
Hi, Angela. Jules here. I'm with KPMG, and you struck a nerve here because our onboarding process is, I don't know, it's from the
challenging
caveman time. It's brutal.
Yeah.
So it resonates with me. Can you give a little bit of information, case study wise, like what you're doing with EY or another professional services firm?
Sure. I'm glad you brought up EY. So one of the use cases with EY.
He's working for the counter group, so don't give him intelligence he can use. Go ahead, Jules. Good try.
I did full disclosure at the front end, Jordan. Back off.
Yeah. We've already developed a use case that works for one of the big 4. Why not service all of the big 4? So the use case with EY, there's 2 separate use cases that we're looking to work through. One is that there's an internal use case. So obviously their risk and compliance process, they do vendor due diligence on a regular basis. We've also spoken to PwC. They do, obviously like about 10,000 of these checks a month just in the APAC region. So I'm assuming, that you're kind of in the same kind of realm as these other two players as well. So the first case is an internal use case where they use us to onboard their vendors internally. The second use case is where they do a lot of digital transformation consulting for their client base globally as well. So as part of that is recommending a suite of technology and technology that they have done sort of a basic analysis on as well. So there's an opportunity for us to be on that panel as well. So dual use cases.
Great, thank you. Please, we have time for more questions.
In which area do you have a monopoly where you don't have any competition? What segment of what you're doing?
Yeah, interesting. The competitive landscape question is always really interesting. So, SaaS companies, I think everything's replicable. What we've done a lot of work with, that I can speak to us personally, is structuring the data that has come out of these databases. So before we even wrote a single line of code, we went to our potential customer base in a variety of different industries globally, from different companies and different people within those companies, and found out where their pain points were. And one of the biggest pain points for enterprise is that they wanted an end-to-end workflow solution. They didn't want 10 different providers that do something small and something narrow. So what we've built is the infrastructure to be the umbrella company. We can then plug in any types of data sources that we like. So we can not only service, WorldCheck is one database we can add in. We can also add in Dow Jones, who's their competitor. So if you're a large enterprise, which is what we're seeing more and more, and you need to look at dual data sources, we can provide that. So it's the end-to-end enterprise workflow is where we really see our sweet spot. There are other competitors in the space, but everyone has always seemed to focus on financial services, and they built a product for financial services and a lot of the time retail financial services, which doesn't fit for the enterprise market.
Good. And I see that Jordan, are you?
Thanks a lot. Thank you for this. Your fundraising goal, without mentioning numbers, is tiny. It's very, very small for where you're going with this. This is an enterprise class. How much money you're raising is going to evaporate in 3 weeks. Help me understand why so little.
Yeah, good question. I think, we're always keen to listen to advice. And if there was a fundamental that we were looking at that we'd like to look at different, we're happy to do that. What we've done is work backwards. So we've worked out where we want to be next year, which is in 1 mil ARR. And we've figured out how much of the team we need to get to that point, and then we've divided that down and to get that number. So I think from our perspective, we've already done a lot of the hard yards. We have a product, it's in market, we have paying customers, so we're not starting from zero. Having said that, we are always keen to engage with investors. So if there was a use case you think we should be looking for a large number and aiming higher, then that's certainly a conversation we'd entertain for sure.
Just very quick,
I think
are you doing direct
under promise, over
reseller
deliver is always our sorry.
Are you selling directly, resellers, partnerships, or all of the above?
All of the above, exactly right. So one of the aims of working with organizations like EY and like KPMG is that reseller model. We're also looking to our venture capital network to be a channel partners for us as well. So everyone sitting in this room would, I guarantee, have a portfolio company that would benefit from a product like ours, and then direct sales as well is something we're looking at. But it's always through the warm introductions that you get the better traction. So that's what we're looking to.
Good. Thank you, Angela. Thank you for your presentation, for your answers. And so we are going forward. Please welcome the startup which won the battle in South Asia and Oceania from India. Xoxoday, please.
Hey, hi.
Hi, Manoj. How are you?
I'm good. Is my screen visible?
No. Maybe. Yeah, now it's going to share.
Now?
Yeah. Good. Please.
Perfect. Thanks, Julia. Good morning, good afternoon, good evening. I'm Sumit, co-founder of Xoxoday. So businesses are constantly looking to improve performance, revenue, productivity, and growth. And this is something which is very, very standard. But what's driving that entire engine is primarily driven by people. And the people within the organization landscape is all about employees, your customers, your sales channel partners. And what we know at the core is if the people are not motivated, most of the parameters which you run after, growth, productivity, performance, will really get into not happening. And if you are able to make them motivated, that can drive really good business results. And that is where Xoxoday comes in. Xoxoday is a tech product company which is looking at putting motivation as a central catalyst of growth. And when we say that, how do we do that? We are primarily a rewards and incentive platform, which is powering different legs of people to power a business success. We are a motivation technology platform. We've been doing business for the last 3 years, and the traction really speaks about it. We have more than 800 customers today we are servicing across the globe, with a reward spends to us, which is in the tunes of $42 million and a net revenue of $4.5 million today. And all that we have built has been built with $700,000 of capital infused in the business. The market which you're targeting is really huge, and because there's a lot of spends happening around this, almost $300 billion market is what we are really looking at targeting. And when you look at the problem statement across any of these, it remains same. One, the rewards are really not linked back to the core business goals or the KPIs. A lot of operational hassles because every organization does that. The third is there's a limited choice, and the geographical landscape also becomes there's nobody who's global in nature. And then it's not really integrated, which means within the entire ecosystem, they're not available. And that is where we really are looking at providing the ecosystem. We find a simple analogy, the way Stripe is to payments or Twilio to communication, and that is what we really do. We want to be a Xoxoday for rewards and incentives. The revenue model is very simple. Every rewards which goes through our platform, we charge a fees for that. And then we do have a software upgrade fees along with it. This is the basic horizontal reward infrastructure stack. If you look at it, right at the bottom is the reward catalog, where we built up a large size of engine, which is all API driven. On top of it is the tech stack, which is built up with multiple pre-built integrations, APIs, modern ops. And then we have built up multiple rule engines, schedulers, gamification, softwares around it. And then the top is the application layer, which would be used for employees, sales channel partners, or customers. What is interesting, and this is the critical part, which is also our GTM plan, is we look at the different business metrics which organizations are driving across customers, sales, employees, and others. And we have kind of integrated that within the ecosystem which we are. So if you're a sales guy and you're looking at acquiring new customer acquisition, and you use a tool like a HubSpot or a Pipedrive or a Salesforce, how can you do that? We are integrated to manage your incentive within that ecosystem itself. If you're looking at ways to enable your employee engagement or employee rewards recognition, we are within the HR ecosystem, be it the likes of a Bamboo HR, a Workday, and others, or Slack and MS Teams. And that's something which is accelerating our growth. This is our growth plan. I think we have been growing at a very healthy pace. We have been acquiring one customers on a day-to-day basis, even amidst COVID, and digital transformation is really pushing our growth. A set of customer base. Yeah, and I think what we are looking at is we are looking at kind of growing to a $1.3 billion in the next 4 years, and we have a good mix of strategy in terms of how to go there.
I'm sorry.
Sure.
Yeah, your time is up. So
yeah, I'm done.
Henry, a quick question, simple ones. I think you shared, I think one of the first or second slides you talked about, you getting great traction. I think 42 million sales, I think you mentioned gross sales, and then 4.5 million in revenue. What's the difference between that metric? That's number one. Number two is, can you share your thoughts, even though that you're getting great traction, can you share your churn rate, maybe like a monthly churn rate? Thank you.
Sure. So I think I'll just stop it so that I can obviously answer your question. So I didn't mention, right, we are very similar to the way a Twilio works or the way a Stripe works. So we charge a commission on every spend which happens to our platform. The rewards and incentive spends which happens to our APIs or through our platform is in the tunes of around $45 million, $42 million. We get a commission out of that, which is in the range of 10%, and that brings it to $4.5 million. That's on it. From a churn standpoint, our churn is really low. And I think that's the best part of it. Our churn is sub 10%, and that's the exciting part. And we acquire customers at a very low cost. A large set of integrations are really the ones which help us acquire customers at a very fast velocity.
Follow up, just a quick follow up. So essentially the gross sales is like a GMV, right? That's number one.
That's
number two is, when you say the churn, it's sub 10%, is that 10% or less than 10% monthly?
Less than 10%.
Monthly?
Less than, no, less than 10% annually.
Okay, great. Got it. Thank you.
5%, 5%, 7%. There's a big difference between 10 and 2%. Give us a number, man.
10%, less than 10%. So it's around 8.7% approximately.
God, I'm looking at your portfolio. You're looking at $42 million in 2021 in revenue. Am I reading this right?
That's the GMV, as Henry mentioned. So it's the spends which happens to our platform. That's right. A net revenue of $4.5 million.
Just look at 4.5. That's the actual sales for it. That's the easiest way to.
That's right. Yeah, that's right.
Good. Please, more questions. We have time a little bit.
You're located in India, but your market is primarily which geographies?
So it's primarily we started with India, and the market is North America, and that's what we are really focusing.
Are you landing here anytime soon, or are you going to operate?
We already have built up a team over there. We have a 5-member team already in the US, and I think some of this is something which is pushed back due to COVID.
Thank you for your time.
Thanks so much.
Okay, good. If nobody has questions, we are moving forward, and thank you. It was Manoch from Startup Xoxoday. Thank you so much.
Thanks.
And now, yeah, you can stop your screen sharing. And now I'd like to invite the startup Magnevane from Portugal. And this startup won the Western Europe battle. Please, you're welcome.
Fantastic, Julia. You can see the screen and everything?
Yeah, it's good.
Fantastic, thanks. Magnevane is a disruptive industrial technology. But why should you care? Because the planet is under huge threat. We know we need to change the way we make power, but we also need to fundamentally change the way we use power in terms of efficiency. Now, very quickly, what's in front of you? This is an air motor. Compressed air comes in the top, it pushes those vanes and turns the rotor around and does work in many industrial processes. Now, normally how it works is centrifugal force forces those vanes out against the side to create the seal. But what Magnevane has done and patented is the use of rare earth magnets inside the core and inside the vane, which forces the vane out against the side and really fundamentally changes the profile of the motor. Now, if you look at pneumatics, it's a very cheap motor usually, but very, very expensive to operate. And Magnevane can save up to half of that operational cost, which is largely electricity. So again, I ask you the question, why should you care? Because pneumatics uses 10% of all global industrial electricity, a massive amount. And the equation is incredibly simple. You take an existing pneumatic application, you replace it with a Magnevane pneumatic technology, and you can go and reduce energy intensity by up to 50%. To give this an idea of scale, if you were to scale our technology across global demand, you could remove 350 coal-fired power stations from the world. Now, what's very exciting about Magnevane is, yes, we make great equipment, but we're actually a technology and an IP company. So we've got 4 patents protected in 80 countries for the motor that you've just seen there. And we've got another 10 patents entering the PCT process. We ultimately will make our money from license agreements, royalties, and distribution agreements to get capillarity. Now, what have we actually designed to date? We have built this motor, which we can show empirically is better than any other motor in its class. And the sector alone is 8.8 billion US. If you extend that to the total equipment market where air motors have used, the TAM moves up to 27 billion. And we already have a chainsaw and a pump. If you commercialize what we already have working prototypes for, positive displacement pumps, compressors, blowers, and hydraulic pumps, the TAM moves closer to 100 billion euro. Now, quickly, how did we get here? Seed funding came in 2018 to register the patents. The Series A went to acquiring a precision manufacturing facility in Portugal. We've started to make our first products in 2020-21 this year. So motors, chainsaws, and pumps. We're a very attractive investment because we can immediately retrofit into a client without them changing their whole technology. With the same cost to manufacture, we can use existing distribution service channels. And ultimately, there's this massive tailwind coming in from efficiency. How would we use our investment? In R&D to expand past just the motors to that full range of products. We'd scale our facilities and we'd scale our distribution centers. On sales, we need a team uplift, marketing, and market entry into markets like the US. We have an independent patent valuation by Clark Moday of 360 million euro. And last thing I want to say is that I'm a big fan of digital transformation, and it's very important. But unless we can change the physics of how we make work happen, like in motors, we can't go and save the planet. Magnevane has the technology for implementation today, and we're patented. Thank you so much.
Thank you a lot. It was the last startup in this season, so pitching today. So please, yeah, your questions, dear judge.
Tell us about your revenue trajectory for the next 2 or 3 years. How does that lend itself to a multiple in the valuations?
So, I mean, obviously very large markets, and I'll just go down quickly here. If you look, for example, at this slide over here, this gives you the performance against the best motor in the world. This is the best motor in the world, and this is us. So we're fundamentally
money. Give me about money and dollars, not performance, please.
No, exactly the point. So we have a trajectory to reach $100 million revenue within 3 years' time, and there is upside potential behind that if we get some very strong OEM agreements in place where other large companies that have capillarity of our technology are able to very quickly realize revenue.
What does 21, 22, and 23 look like in revenues?
So let's just say at the end of this year, our current plan is to reach 2 million euros. As I said, we've just started this year, so it's heavy industry takes a bit of time to ramp up. Next year, we're looking at 25 million euros, and by year 3, we should be at 100 million euros. And I believe that is an underestimation given the headwinds happening in efficiency today. We currently have a TCO in every single solution that we deployed of under 12 to 18 months. So it's a very strong value case.
What is your profit margin? And also, what is the feedback or anything to improve technology-wise from the feedback of any of your partners?
So we've had very strong feedback. As I said, as we launched only this year, we have 3 major industrial clients at the moment: Anglo Gold Ashanti and Harmony, who are in the mining sector, and Sappi, who's in paper and pulp. These companies are not only moving across to our technology, they are setting up programs to see how they can scale the technology across their organization because of the performance that they have seen thus far. I don't know, was another part of your question?
Margins?
Actually,
yeah, please.
No, actually, the first question is your profit margin.
Yes, okay.
How much profit? And also the second question is anything you want to improve?
No,
like
perfect.
what do you want to improve from? Yeah.
So our gross margins are between 70 and 80%, very, very high. And if you look at our ability to manufacture against our core competitors, the addition of our IP only adds about 1 to 4% to the actual cost of the product. So when you're looking at a 20, to 30%, or let's say 70 to 80% gross margin business, we can actually come in cheaper than our competitors with a better product, with what we're able to do right now.
Good. Please, I heard that somebody wants.
I'm assuming you're selling the units one at a time or a dozen at a time. Is there any potential for licensing so others could resell it or sell it for you?
100%. So, I mean, there are over 200 products in this market, and it's global in 8 different sectors. The only way for us to realize value in this market is to have license agreements, royalty agreements, and distribution agreements on a global basis. Many of these clients are very specific. They're in heavy industry where things blow up and explode. They've built close relationships with specific OEMs. And ultimately, we want to go and leverage off their market capillarity and strength to go and scale. So very much open to those. But what we found is it's been very useful for us to disrupt the OEMs with our product to prove its performance in situ. And then all of a sudden, the conversations become a little bit better with the OEMs.
Good. Maybe more question. We have a little bit time.
Yeah, I'll jump in. Gareth, great job on the presentation. Very impressive. Did I see that the value of the company right now is 358 million?
So that's an independent patent valuation by Clark Moday. So that's not that's a patent valuation almost in the absence of the business. If we would have sold the patents today, that's what we should be able to sell it for according to Clark Moday.
Good. Okay. Thank
Maybe
you, Garrett.
Garrett has magnets for people, because I sometimes feel I need a little bit the push-up, especially at the end of the season.
We'll work on that, Anna. You must help fund our business, and we'll make that our consumer product.
Okay, keep me in mind.
And I'll spice things up a little bit. Are you getting any offer, Gareth?
Any offer?
Yeah, I mean, if you look at your patent, it's value at a certain things, and then you're adding value with your product. Are you getting paying for maybe potentially of a sale?
So
no names, but you can just say, are you getting?
No, sure. It's a great question. So we've had offers, but our view is that there's a lot more value to add in the business in the next 3 years. So we're trying to not sell out. We're trying to minimize the amount of equity. To date, it's fully shareholder funded. And manager funded. So we're trying to get the business to a point, and now with all the patents being filed and these really strong commercial partnerships with blue chip clients, we're well on that track. But we're only looking to exit a smaller portion of the business at this time, because we think there's a lot more growth for Magnevane.
Terrific job, guys.
Thank you very much.
I won't be surprised if I hear you get offered by a SPAC. Right?
I've heard offers of a SPAC, and I think it's a very, very interesting opportunity. But for us, what we're also very interested in is not just the money. We're looking for the right partners to help us with appropriate market entry, because a lot of these large OEMs are predatory. They're very aggressive companies. And we're wanting to make sure that when we bring on the right partners, we do it in a responsible and appropriate way to realize the maximum from the IP.
Thank you, Garrett. That was our last startup, right, Julia?
So much.
Yeah, right, Gary. Last one for today.
Great pitches, guys. You have done it all. Now, dear judges, now it's your turn. Please put the marks. And we will sum up with the marks that our startups got from the first pitch session that they did. And while you are doing this, you have approximately 15 to 20 minutes, maybe 10. We have a special guest today. And you will never guess who that is. That is Juan David Jaramillo. Am I pronouncing that right?
Yes, it is good. Yes, okay. Hello, Anna.
Hi, great to see you. My Spanish is not that good as Julia's, but I'm learning it. And the reason we are talking today to Juan David, that besides being our Unicorn Battle winner from Latin America, besides that it is his birthday today, besides that, he had raised almost 26 million at Crunchbase. And besides, he is one of our favorite startups that Startup.Network had invested in, is that he is a great person to talk to, because he is a serial entrepreneur, investor himself, has a unicorn in his pocket, and doing a great startup called Muncher, Black Kitchens. So, hi, Juan. Great to see you today.
Hi, Anna. Great to see you also. Thank you for that great introduction.
Okay. It's really a pleasure to see you, but I was going over your profile in Crunchbase, and I had found out that you have investors from Mexico, FEMSA, Amador Holdings from Panama, Copernion from Spain, and finally investors from the Silicon Valley Startup Network and TMT investors, and from Florida, MGM Innova Group. So you're an example to me of the true startup spirit, life without borders. And was it difficult for you to communicate with investors from different countries? How did you manage to collect them all? Because I adore what you do.
Yes, it was really a challenge. But when you have an idea that it globally makes sense, it is easier to talk with different investors. Sometimes what was difficult is that the different time zones, because it was difficult to have everybody in the same meeting. but it's really good because you have visions of people from different parts of the world that can add a lot to your business.
So you were sitting where you are and communicating with them online? You were not like traveling, you were not like meeting them in person? You did all this by sitting online?
Yes, it was sitting online because this was a funding round post-COVID. So that is one of the things that have changed a lot because before you would need to travel all over the world to close your funding round. In this case, I didn't need to travel, but we have a very solid project and a great idea, and the investors see that with us. And always is good to have smart money. So having investors with such quality and that want to be involved in the day-by-day basis is really good for your business.
And what advice would you give to other startups, because they're saying, it's so hard to reach out to investors? You're an example that it's everything is possible. Was it hard to reach out to Silicon Valley investors, or what's your secret of doing this besides pitching at the unicorn battles here the right way?
Yes, it's very important, the networking. One of my angel investments was in Rappi, that is one of the unicorns in South America. And that gave me a lot of connections and networkings to have direct communications with venture capital from all over the world. So to work in the networking is really important, but also having events like the Unicorn event is really something that every entrepreneur needs to do. For us was a very important moment for our funding round, because our lead investor was connected by this event that is TMT investment. For us was really good, this process.
Thank you very much. And it was really great to hear that. And looking back, you are now successful as an investor, successful as a startup creator, and I wish you all the luck in your personal and family life. But looking back, what was your biggest achievement in life? Right at the point you are standing right now. Today is your birthday, so people do look back at the years that had gone. And what was your biggest mistake as a startup? Probably would be interesting to know.
Yes, the biggest achievement it was when I decided to leave my work. I work for a construction company. And decide to do my own business and start Muncher, because that was the moment that you decide to try to do your own business and make something important about that project and that idea. And to make that happen is my biggest achievement. It's really comfortable and makes you really happy when you do that. So that is the biggest one, and the biggest challenge is really that when you are doing a startup, you want to do a big company that has a big impact, and you want to be actively in a transformation of an industry. That is what we are doing in the food tech industry. So at first, it is not easy to have that idea in the same same vision that you have for the investors, because it's something really new. At this moment, dark kitchens is very familiar, but when we started 3 years ago, it was not like that. And we also decided to do dark kitchens on shipping containers. So that was also not easy. So I start to have that vision and that model communicated to other restaurants was a very important challenge.
But you are showing great growth, like really great doing that. What do you think? You are doing so good in this startup Muncher because you had a previous experience in your startups? Or was it like you are just in the right time and the right person for this? Or it was the right idea for you and you are the right person again to implement it?
I think there is a lot of things that you need to have to be successful. One of the important things is the timing, because the dark kitchens model was really new. And when we started in LATAM, nobody else was doing the same business. And we decided to do it different because it's not like the traditional dark kitchens model that is in warehouses. We use a different approach. And also, we were lucky. Lucky sometimes it also makes sense because when in the middle of our process, the COVID started and that accelerated our project. We really think that the vision was going to happen, but when COVID started, it accelerated. So that is also important in a process as Muncher did. You need to have the investors that give you more than money. I really think that having smart money is very important, that help you in the process, that help you with connections, to open doors. That is really important. And to have a great team. We have a great team in Muncher. I think people are very important to be successful in a startup that has a big growth, because anybody by themselves could not do it. You need a team to do it. So that is very important.
That is great, Juan David, and I wish you all the luck. And thank you for coming today. Thank you for dedicating time. And right now, dear judges, we can announce the winner. Everything is public. The voting, thank you, Juan David again. The voting is closed. And if you allow me to, hold on a second. If you allow me to share my screen. Here it is. Okay. Hold on a second. I'm ready to announce. We have two companies that won the third place. That is Intelligence Diligence and Xoxoday. Whoa, you are number 3. The company 8base is number 2, and number 1, the winner of the Unicorn.Events Unicorn Cup Spring Season goes to Magnevane. Magnets to everyone. Speeding up, saving the planet. Congratulations, Garrett.
Thank you so much, and to the judges, that's unbelievable.
Everybody believed in you. Look, 396, that is great. That is really great.
Well done to 8base, Xoxoday, and all the others. Wait, who's the other third place winner?
It's important, what is the mission behind your startup? And I think you have a great mission, right? And that is, I think, was instrumental in moving the judges in your favor.
That's great feedback. Thank you.
My vote is because of the good look of Gareth. So, but anyway, that's just me.
So what was that, Henry?
Keep up the good look. My vote for you is the good look. So
I'll take votes however they come, Henry.
That is really good. And dear judges, let's talk a little bit. not only about Garrett, though he's the star of today, but also about your experience of being VCs in these hard times. Because I was looking over recent publications, the Crunchbase, and we were discussing when we had a break between sessions with Alexander, that it is unbelievable growth of venture investing. It has never been that venture industry had invested more than 100 billion in one single quarter, but quarter one of 2021 is showing investments of 125 billion in one single quarter. And if we look at the unicorns count, every single working day brought us at least 2 unicorns. That is something we should really talk about, because that's what we are doing at our unicorn events. We are breeding unicorns. And so, dear judges, Ella, what do you think? Will be able to keep a pace? Will venture capital be investing in such a great big amounts for like following quarters, quarter 2, quarter 3?
Yeah, I totally agree with that. So I have a special interest in healthcare sector, which is very different from also other sectors. So if you're looking at no matter the number of the company being invested and also total amount of money going to the sector, even starting from the third quarter 2020, actually the money is going like in the space until like going up until reaching to the last quarter of last year. Actually, the amount of money goes into the biotech sector, the VC money goes to the biotech sector, actually already goes at the same level as the second quarter or right before COVID-19 starts. And also, actually, I would say this is the one mission of a venture capitalist to support all the great companies to thrive, and also trying to make the product becoming from lab space into really the commercial space. And also speaking of biotech sector, actually there are a lot of brilliant scientists and also wonderful technologies, and they a lot of them fail. It's not really especially for that space, a lot of them fail just due to the lack of capital. So a lot of times when I talk with all this, especially the very early stage company, especially the ones being out from campus, was being out from, let's say, the institute, then try to taking advantage of, for instance, even tech transfer office, getting a connection with the capital side and also venture capital side will be really helpful. And also some tips giving to the startup company how to pick really the great investor. Of course, the one with the deep pocket is one thing that can help you to really bring up the doors to many resources, but also meanwhile, the ones can help you to expand your business after getting the capital is also really important thing. So definitely reference check the investor. That's also something to the startup.
Thank you, Ella. And Jim, have your fund been investing more in quarter 1 of 2021? Are you in this Crunchbase trend also? Do you support what we see?
Yeah, I think, this past year we were all concerned, if the world was turning upside down. And I think it's the amount of innovation that we're seeing these days is just we knew that we were moving into this really innovative phase. But what's really interesting is when those companies really start coming at you, and the deal flow throughout the US and then the international deal flow, especially in that early seed stage, but these are proven company, proven technology, seemingly real IP, and yeah, it's if we ever thought it was going to be a slowdown, it is anything but a slowdown. And I think what we were projecting out, 5 and 10 years is just, speaking of the crunch has just accelerated that piece. So we're doing due diligence left and right, and we have multiple investments we'll be announcing in the next several weeks. So full steam. Yeah.
Wonderful. Don't forget to let us know when you have interest to share. Okay, but maybe that's we are witnessing a new trend. Like, I personally love science fiction, And I was thinking when we will live in 21st century, everything will be like in a science fiction book. Maybe right now we are starting doing this, like all those flying cars, I don't know, people talking to each other without any phones or anything.
Yeah, I mean, we're getting there. You know, people say, hey, why is it 2021? And the fanciest thing I have is the iPhone in my pocket. But literally 25 minutes to the east of where I live is the first announced vertical takeoff and landing airport. It's planned, and they're planning on opening that I think by 2024. So I think those things that you really notice right now, it's more on the software and hardware side, and it's not in our face as much. But I really think we'll start, as a society, we'll start to see those things more and more from a physical perspective.
Wow, really looking forward to that. Thank you. Thank you very much. And Jordan, I know that you're a fan of the flying to the space. Do you think that a lot of investments that we see, it's due to people believe that this will be finally happening, that people believed in new technologies, and that the new technologies will solve many problems we are facing right now as a humanity?
I think it's a few factors. One is life has changed as we know it. So that opens up many avenues for investments in different ways of living, health, and so forth. Health is no longer an option. It used to be health is optional for many people. Now it's a necessity. It's a life and death. So that opened up that. In the US, the stimulus money is on the streets. There's hundreds and millions of dollars that are going in the investment space. With respect to outer space, it's not about sending people to Mars and so forth. It's about satellites, about communication. It's about the auxiliary system to support it. And thanks to Musk and the Amazon guy, privatizing this has changed the equation. Just 4 days ago, they launched a ship and they're going to use it for the 10th time. Imagine that. So if you think you're not living in the space of technology, you have more computing power in this little silly phone for $300 than we had in the best computers in the 1980s and the 90s. So I believe, not my generation, but the next generation, going to outer space would be like going to Texas. Not Florida. Florida is not a good place to go, but Texas. So it's coming, guys, and it won't be in my lifetime, but the next 20, 30 years, outer space will be, yeah, I'm going to the moon. As long as I don't land in Florida, I'll be okay. Right, Jim?
I heard that. I heard that.
I know.
Okay, guys. Well, it was fun as always. I really love you. Thank you for this great event. Thank you, judges, for being such great experts. Next season is starting on 15th of June. It will be really short. Every week we'll have 2 events, and on 15th of July we'll have finals again. Best innovations ever, just for you. Thank you, Julia, for this great event. Thank you, all the judges. Have a great day ahead. And
Julia,
congratulations.
wonderful work. Great job.
Thank you, everybody.
Always.
Thank you.
Bye-bye.
Thanks, guys.
Thank you. And bye-bye.
Yes.
Bye-bye, everybody.
Bye, Julia.
Bye, Anna. Bye, Julia.
Bye.